13 blockchains walk into a bar, but only 3 of them can afford a drink. And that is going to be the essence of this report today. I have spent the last 3 hours looking at DeFiLlama, analyzing stats, putting them into AI models, getting them to look for catalyzing events, and amalgamating all of that data into a single report for you today. So we're going to cover the top 13 income generating blockchains, or by market cap, not necessarily all income generation, but we're going to look at 13 of the big boys. And we're going to ask ourselves which one represents the best value investment for retail. Now, before we go any further, this definitely isn't financial advice. This is just me reporting on data. That's what I'm doing today. And we all know in crypto that this doesn't work like traditional investments, that narratives and hype are a big part of the mix. So I cannot factor that in. There's a lot of hype in crypto, and there's going to be a lot of things that defy reason when it comes to the actual revenue stats. But what I'm going to give you today is some absolute gold. We're going to look beneath the surface and we're going to see which of these engines is running and making money despite the current collapse in price in the whole crypto market. So stay to the end, my friend, to find out which are the top 3 investments that we could look at now, which is, of course, not investment advice. So there you go, my friends. So firstly, let's talk about a new kid on the block. It's not as new as you would think, but it's certainly a blockchain I hadn't heard of until I did this research. And that is the blockchain called Canton. So what is Canton and why should you care? So you've probably never heard of it. So neither had Goldman Sachs until they invested in it. So Canton Network, it's not your typical blockchain. It's not trying to be the next Ethereum or Solana. It was purpose built for Wall Street. So here's what made it unique. So it was built by a lot of big players, including Goldman Sachs, JP Morgan, Visa, and HSBC, BNP Paribas, to name but a few, the big institutions. And what they've decided is that they don't want all of the other institutions seeing all of their transactions online because it would give them an unfair advantage. So what they've built, unlike for us plebs, they have built a privacy blockchain where nobody can see what they're up to. But they can transact on the blockchain. So we need to be seen. Our transactions need to be tracked because we could be breaking the law. But these big institutions have built themselves a blockchain that allows them to do the complete opposite. And this, my friends, is despite that a lot of the errors, a lot of the fines that are issued by our FCA here in the UK, usually the top fines usually go to the banking institute. So they have created a lack of transparency, which is what blockchain was designed to give us. And that, my friends, is Canton blockchain. So we're also going to look at the fact that we have the real world asset mega trend here. So we have a 60 trillion opportunity that nobody seems to be talking about. The real world asset market has grown 380% in the last 3 years, hitting 24 billion. So McKinsey, they project that this becomes a $2 trillion market. And BCG says that 16 trillion by 2030. So tokenized equities exploded 2,878% in a single year, from 32 million to 963 million, my friends. So there's big money going into real world assets. And the one that seems to be quietly building under the radar is Stellar blockchain, which has a massive real world asset to total value locked ratio. So they are quietly building. So Stellar has 2.36 billion in real world market cap, sitting on top of just 219 million in total value locked. That's a 10.8% ratio. It's a bit like finding out that the quiet kid at the school owns half the town. So one to watch there. It's quietly becoming a major institutional settlement layer. But daily chain revenue is just $1,423. The market cap is 6.34 trillion. That's a valuation that requires a lot of faith in future adoption. So, my friends, also, I did a review earlier this week on Polygon. Now, since that review, on July the 9th, which is just 3 days before this video has been recorded, it has now got PayPal has launched natively on Polygon. It's got 340% increase in weekly transaction volume and 1.2 million new active addresses. So there you go. MasterCard is processing 5,000 payments per second on Polygon. There you go, folks. Big news on that outfit. So here's a few interesting facts that don't seem to fit anywhere else. So here's the stats when we're looking at value investment. What is actually happening on these blockchains? Now, before we even talk about Bitcoin, Bitcoin is a store of value. It is atypical. And apart from anything else, it's a commodity and not a security, which is a completely different video for a different time. So it is a completely separate asset class, but it generates zero chain revenue. So miners keep everything. The 1.28 trillion asset is essentially a $55 million a day charity for GPU farms. So, and here's the other one. XRP does $242 in daily chain revenue against a 68.4 billion market cap. That's a market cap revenue ratio so large, it broke the calculator. So Polygon generates more daily app revenue, 2.22 million than Ethereum, which is 1.12 million, despite having 257x less market cap. And Canton's total value locked is 254,000, less than the average London flat, and yet its market cap is 5.3 billion. Hyperliquid has 70% of the market share in DeFi perps, and routes 99% of the fees buying back its own token written in the code, not promises. So the Hyperliquid tokenomics are exceptional, and maybe this is something that not a lot of people are talking about. It is designed to win, and with that mechanism of 99% of the fees being channeled back into the protocol, that's in code, and code does not break laws. Not like human beings, my friends, not like human beings. And back to the saying that code is law, which is why Bitcoin exists. So Sui's fully diluted value is 7.38 billion against a market cap of 2.99 billion, meaning that there are 4.4 billion worth of tokens yet to hit the market, with unlocks running until 2030. So beware the dangerous vesting schedules in these top things. And I'm just covering some of these things just so that you know. All of this is going to be channeled. We're all going to present the top 13 in reverse order very shortly, my friends. But these are some things that you need to take into account. So here's some alpha bullets. Polygon has a 840 million market cap, 2.22 million in daily app revenue. That's a 1 times fully diluted value to market cap ratio. So PayPal and MasterCard are live on the protocol. Tron has 709K of pure daily profit. There's no incentives to use Tron. There's zero unlock pressure, my friends. The pleasure in the pressure. No, it has zero unlock pressure. So it means that the tokenomics have all been flushed out. The token dumps are done. And it has 90 billion in USDT dominance. So Ethereum has 14.71 billion of real world assets and a 55% market share. Solana has 7 million active addresses and 41% of all the developer app revenue. So Arbitrum has a 0.48x market cap to total value locked. It's the most undervalued metric on the list. So the Robinhood chain is live on Arbitrum as well. And Hyperliquid has the 99% fee buyback and the 70% perp DEX share. So Canton, 6 trillion in assets, best institutional roster, but 99% bypasses the token. So it's a valuable blockchain with an almost worthless token attached to it. And Binance Smart Chain has 1,650 active developers and burn-driven supply. So it's solid but uninspiring. Avalanche, 1.31 billion in real-world assets, but only $1,485 in daily revenue. And its volume is down 24.74%. SUI is the SEC commodity classification. So, but with 2.4x fully diluted value to market cap, it unlocks to 2030. So we're dealing with more tokenomics pressure on SUI. And Stellar has the 10.8x real world asset to total value locked ratio. So this is a little hidden one, but it's not really generating any real revenue with just $1,423. So it's a bit of a paradox one. So here we go. Let's go to the countdown. And for this, my friends, what I'll do is I'm going to share my screen with you. I shall share my screen so you can see it for yourself. And here it is, the result of all of my AI research. So here we are. Act 6, the countdown from bin to fire, retire early. So last on the list is XRP. Now, XRP is a strange one. There's a big XRP army and no doubt I'm going to get shot down for having it last on the list. When we look at the stats, the 68.4 billion market cap and $242 in daily revenue. That makes it market cap to total value locked of 2037x. Now, it's not an investment thesis. It's a leap of faith investing in XRP, and DeFi metrics is less finance and more organized religion. However, having said that, my friends, because of the cult following XRP have and the narrative cycles, it's almost definitely going to make money. So it's a strange place. Crypto is a strange place. So to you, XRP army, I say this, although you're last on the list, because of your devotion to the cause, it's a bit like a religion. XRP is a bit like a blockchain religion, that there are so many people that are invested in the vibe, in the narrative, in the network, that this will almost definitely make money despite being last on the list. And it just goes to show, because Bitcoin is 12th. And remember, before the purists come at me and say that's completely inaccurate for Bitcoin, this is based on revenue stats. This is looking at it like a business would. Now, Bitcoin is making a lot of money for the miners. Yes, it's a store of value. Yes, it's the most solid crypto project. Yes, some will argue it should be top of the list from an investment point of view. But based on its current metrics, based against this algorithm that I'm doing, it only lands as 12 on the list. Number 11 is Stellar. So here you go. So the volume's down 47% this week. We've talked about its real world asset holdings. So it's like a massive high-tech shipping port where only one rowboat arrives per week. The real world asset story is real. The revenue is not yet. So the bottom line is, although Stellar's sitting 11th on the list, once the real world asset stuff kicks in, this could absolutely rocket upwards. So although these three blockchains here are not doing well, it doesn't mean that they don't have great potential for price action moving in the right direction. So SUI, here we go, number 10 on the list. You're not paying for tokens that will be dumped on you for the next 4 years. Regulatory clarity is nice, but someone else's exit liquidity is not. Now, SUI faces one of the issues that newer blockchains have. There's a lot of people that got in at a significantly lower price and their tokens get released up until 2030. And every time there's a release, there's going to be dumpage and price suppression, which means that you investing at this price is going to be exit liquidity for the whales, for the early stage investors, which makes SUI only 10th on the list. AVAX, number 9. So the real world asset active market cap is impressive, but only $1,485 of daily chain revenue tells you the full story, my friends. So this has been massively backed by the big institutions, but it hasn't received adoption. This is the Euro Disney of the franchise, and there's less people using it than that. A big theme park, but nobody wants to visit it. So here we go. Canton is the 8. This is the privacy thing. This with a token associated that's not really worth much that we've actually discussed. This is the privacy. This is the institutional play for the big boys. Let's look next on the list. Number 7 is Binance Smart Chain, BNB. So this is the Honda Civic of crypto. It'll get you there. You won't get any dates and you won't end up stranded on the motorway. So it's a slow, solid vehicle that is unspectacular. Hyperliquid gets number 6. So the 99% free fee buyback is written in code. We know that it's got revenue, it's doing well, it's pumped, it's done really well, but it's got 6 million plus of monthly unlocks every 6th of the month, which makes this another vesting nightmare to navigate, my friends. So this will be a project to engage back in once the vesting schedule has completed. It will probably make money, but it will make more money for the people that are sitting on the tokens waiting to unlock than it will do for you, my retail-y friends. So Solana gets number 5, and now we've moved into the green zone. And people that watch my channel will know I like Solana. So this is the most active blockchain. It's the most battle tested. It's the most stress test of the lot. So it's got 70 million or 7 million in active addresses, 41% of all the developer app revenue, and 2.08 million of the daily app revenue. So there you go. This is a solid project, and it's the first green one on the list. Next up, just ahead of Solana, is Arbitrum. So this has a market cap to total value locked of 0.48x. Now, just to bring this to life, the smaller this number, the better. And anything lower than 1 is definitely worth looking at. So this is looking very, very good. So the Robinhood chain in volume, 1 billion in volume in week 1. So there you have it, manageable but persistent. With the unlocks, you're still dealing with unlocks, but you're looking at massive value to balance that out. So deep value hiding in plain sight. The fundamentals are screaming buy. The monthly unlocks are whispering not yet. This is the patient investor's play. Next on the list is Ethereum. Now, this is, as you see here, the safest long-term institutional bet on the list. So Ethereum's a very well-established project. It's got lots of adoption, and it gets number 3 on this current list. Number 2 is Tron, 709K pure, unsubsidized daily profit, 0 incentives, 0 unlock pressure. So Tron has washed out the vesting schedule. You're not dealing with token unlocks, and it's got no incentive to use it. And yet still at the end of that, it is absolutely cleaning up. So from a revenue play, from a solid play, with no reason to use it, it is being used. So the most boring, most consistent cash flow machine in crypto. It's a stable coin shoveling uncle at the wedding who's secretly richer than everyone else in the room. No drama, just profit. Tron, number 2. And number 1, my friends, is the mercurial Polygon. Now, I've just done a video on this, and add that to the Visa update, or the PayPal update rather. So PayPal using it, PayPal and MasterCard as live partners. This has had a recent catalyzing event, which show that at this price that it's currently trading, this looks like an absolute gem. So there you have it, my friends. These are facts. These are numbers. These are numbers that have been streamed through, a bit like the light coming through here on this video. So that is what we're dealing with here. These are just facts. Don't shoot the messenger. All I have done is put data points into AI models and get them to crunch the numbers. And that is the thesis they've come up with. And bear in mind, before everybody hounds me, especially the XRP army, that this is just to do with the numbers. This is, if Warren Buffett came in and looked at the metrics, how much money are they making? What's the market cap? What's going on? What catalyzing events? This is the conclusion he would come to. Polygon is top of the list. So that's what I think, folks. Let me know what you think. Leave your comments. If I missed anything, is there anything that you don't agree with, that you do agree with? Has it helped at all? Either way, let me know. And if you've enjoyed this content, then please do subscribe to the channel, like this video, and do a little channel a big favor. If you like more of my content, you'll find it just there. But either way, stay lunatic, have fun, and make money with crypto.